Good afternoon. This is Al Espinor with Century 21 Select Real Estate Inc. of Stockton, California, with my special guest today, Alex Palios of Scenic Oaks Funding.
Good afternoon, everyone. Happy New Year. Happy New Year to you, Al. Happy New Year to everyone else. Thank you for having me on.
Great, Alex. It's good to see you again. We're going to jump into the market report for Stockton for the month of January. So let me go ahead and share with everybody what is going on in Stockton. So for the month of January, we had a total of 201 homes sold, 181 homes on the market, and 234 that are actually under contract. So as far as homes for sale, we're up from a year ago, same month, 27.5%. Sold, we're actually down due to lack of inventory, 8.2%, and pending is actually up from a year ago, 21.9%. And we jump in and we take a look at average price per square foot in Stockton, $271 in the month of January, actually up from a year ago, 20.4%. Days on market kind of increased in January, 28 days. From December, it was 26. So it's actually gone up 27.3% from a year ago. And
Al, not to interrupt, what do you think the reasoning, a little bit more time on market with December, January? Do you think holidays, COVID? I know that we recently had kind of a little bit of an outbreak. Do you think that had something to do with it?
It probably more than likely did, because I do recall having clients cancel and reschedule, partially due to the family gatherings and the holidays, and then also some that, were ill with COVID or what have you, were under the weather. So yeah.
Or just sick. Yeah, I think we talked to so many people, and I swear right after the holidays, I feel like everyone I talked to was either sick or had just gotten better. So hopefully everyone out there is getting better.
Exactly. Everybody's back healthy, and now we're getting the spring-like weather. So I'm hopeful, and as everyone else, that we'll start seeing a lot more activity as time goes on. Average price for sale and sold. So average listing price in Stockton, $524,000. Actual average price sold, $430,000. So as far as the active price from a year ago, it's negative 1.3%. Average sold from a year ago, same month, 10.8%. And then, of course, months of inventory. Months of inventory for January creeped up to almost 1%. As you notice, from December, it was 0.7, and now it's 0.9. Even though we still have a housing shortage going on, we're still hopeful that we'll start to see some sellers that have been waiting to get on the market start to appear in spring and summer. We shall see.
Fingers crossed.
Fingers crossed, exactly, because we have a lot of buyers out there still waiting to get in.
We do.
Good. Now, let's talk about what's going on in the world of interest rates. Alex, take it away.
The world of lending. So here we go. And this is off of right here on Freddie Mac's website. Thank you, Al, for bringing this up. Basically, if you look at this chart right here, that's kind of tracking this past year, what rates have done. Going into the new year, as everyone knows, rates have been on the rise. The Fed said multiple times last year that their plan going into 2022 was to increase rates. I think they had said 3 to 4 times, having 3 or 4 rate hikes. They had the first one right out the gate as we went into the new year. I like to track the 10-year Treasury Yield. That's kind of like what we look at each day to see what rates are doing. That officially is above 2% as of today on February 10th. We have not been there since, let's see here. Basically, just to give you a perspective idea, when COVID first became a thing, I guess you could say February or March of 2020, that 10-year yield went all the way down to 0.5%. And now we are getting back, just as of today, above 2%. So they had said, I think their next meeting, next rate hike, they had predicted sometime in March, April. So that would be 2 of 3 or possibly 4. So we'll see what happens in the next couple of months. But still historically low. I feel like that's what we all need to focus on. Still historically low in terms of rates. If you go back 10, 15 years, we're still high 3s, low 4s, which is still a great spot to be.
That's a good point that you bring up, Alex, because I was doing a little research on this, and this came from Next Advisor. This was a article from February 10, 2022. And the headline says it all. Inflation pushes mortgage rates up to 3.85%, but experts warn borrowers not to panic. Historically, rates are still fairly low. And that's
inflation.
Exactly. When I bought my first house way back in 2000, I was excited, jazzed about an interest rate at 7.5%. Exactly. My parents, I think, way back in the 80s, they were jazzed about getting, what was it, 12 or 15%, something like that. So it's just a matter of perspective. But even if you look at that, you know, again, when somebody asks me, Al, is this a good time to buy? It depends. You know, if you're planning on holding the property for, you know, years and you're going to live in it, well, of course, it makes sense as long as you can afford it and you qualify. But if you're looking to flip it or do something, then you might want to just, you know, measure your risk, your tolerance.
And that's with anything in the short term. You talk about investing, purchasing real estate. Short term is always going to be riskier or volatile. But over the long run, as you can see over the past 20, 30 years, it has just been a steady increase as far as the real estate market goes. And as far as inflation goes, you know, from wood, lumber, gas, everything has just been on the rise. So this is kind of what the Fed is doing to start hopefully trying to calm down that inflation. But we'll see what happens in the next couple of weeks or months.
There you go, Alex. Well, hey, as always, my friend, we always appreciate your helpful insight. And Alex is here to serve all of your purchase money and your refinancing needs with Scenic Oaks Funding.
That's right.
In Manteca.
You can reach me anytime at 209-202-0600. And Al, I appreciate you having me on here as always, and everything that you do each and every day.
Thank you, Alex. And we'll say goodbye to everybody, and we'll see you again next month.
Everyone, take care.
Take care. Stay healthy.